Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. We're excited to discuss Vanguard Mega Backdoor Roth IRA, how to contribute $70,000 to Roth IRA in 2025. If you have questions or topics that you would like to discuss, please don't hesitate to chat that over. We always appreciate the chance to discuss questions or topics. Also, if you're on our channels on LinkedIn or YouTube or X, please subscribe so you get notifications of when we go live. We go live twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back again in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. As always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice. When making an investment decision, please consult with your tax attorney and financial professional. So let's first start out with some foundational content. So a solo 401k is a 401k for a self-employed individual. Think like an independent contractor, maybe a solo practicing professional. The key is that you're reporting earned self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So if someone is eligible to set up a solo 401k, they can set up a solo 401k with a company like My Solo 401k Financial, like us, that will allow them to make mega backdoor Roth contributions. So with a mega backdoor Roth contribution, you could contribute up to $70,000, for example, for 2025. And then you can transfer the funds out of the solo 401k to a Roth IRA, such as a Roth IRA at Vanguard. So that's in short how one makes a $70,000 contribution where the funds will end up in a Roth IRA, including a Roth IRA at Vanguard. Getting back to our topic here of Vanguard Mega Backdoor Roth IRA, how to contribute $70,000 to a Roth IRA in 2025. So we want to go over these details of how you do that. So first off, you need to be eligible to set up a solo 401k, right? So you're self-employed with no full-time W-2 employees. That's what allows you to set up a solo 401k. Then you need to set up a solo 401k with a company like ours that allows for mega backdoor Roth contributions. So specifically, when you're making a mega backdoor Roth contribution, it's really a two-step process because you're first making what's called a voluntary after-tax contribution, and then you're transferring those voluntary after-tax solo 401k funds out of the solo 401k to a Roth IRA. So you want to work with a company like My Solo 401k Financial that has deep experience in helping customers through those specific compliance steps, such as helping customers set up a separate voluntary after-tax solo 401k account, because those voluntary after-tax funds need to be held in a separate account, as well as handling the required ongoing compliance support. So even though that first step, the after-tax contribution, is not reportable on the personal tax return or the business tax return, the second step of moving from the after-tax account over to the Roth IRA at Vanguard is reportable on a Form 1099-R. And we handle that as an optional free service for our customers. In other words, no additional charge. So to dig a little deeper, here are the steps. Step one, open a voluntary after-tax account. Now, Vanguard, they exited the solo 401k industry last year. And even before that, they were not opening up accounts for third-party solo 401k plans. But there's a lot of other good options. For example, Fidelity, Schwab, just to name a couple. Fidelity is the top option from our client's perspective. So you can have a free brokerage account at Fidelity. We would guide you through the process to open up a free brokerage account at Fidelity, specifically for your voluntary after-tax solo 401k funds. Then you would make the voluntary after-tax contribution. And we field questions every day from our customers in terms of understanding those contribution rules, the limits, the deadlines. In other words, how much they can contribute based on their self-employment income. So you would determine how much you could contribute. You would make that contribution. It would be deposited into that after-tax account. Let's say it's over at Fidelity. Step 2, you need to convert to a Roth IRA. Now, you could first transfer the funds, for example, from the brokerage account at Fidelity for your voluntary after-tax solo 401k contributions to a Roth IRA at Fidelity. So in this way, it would be an internal electronic transfer. Then one could transfer the money again electronically via the ACAT system from the Roth IRA at Fidelity to a Roth IRA at Vanguard. Could be an existing Roth IRA, or you could set up a new Roth IRA. In that case, one would go to Vanguard and tell Vanguard to go and retrieve the funds from the Roth IRA at Fidelity. That would allow the funds to transfer electronically through the ACAT system. Finally, step 3, report the conversion. So even though, again, the first step of making the contribution to the after-tax solo 401k account is not reportable on the personal tax return or the business tax return of the self-employed individual, the second step of transferring the funds from the voluntary after-tax account to the Roth IRA is reportable by the plan on a Form 1099-R. So we handle that Form 1099-R preparation, including electronic filing, under the filing system as an optional free service for our customers. In other words, no additional charge. Customers just need to let us know in a timely fashion, right? Because we don't have access to the accounts, but they can easily do that. There's a form that customers use on our website. You can easily find it at mysolo401k.net/forms. There's an after-tax solo 401k to Roth IRA form. Just takes a minute or so to let us know about the transfer, right? The amount that was transferred, the date of the transfer, etc. And that's how we capture the information so we can put the plan in the queue to prepare the 1099-R. So if that transfer, for example, is occurring in 2025, the 1099-R would be issued for 2025. That would be prepared by February 2026. Now, there's no deadline to convert. So, of course, there's a deadline to make the contribution. For example, if one sets up a plan here in 2025, they'll preserve the ability to make all types of contributions for 2025 to the solo 401k by the 2025 self-employed business tax return deadline, including any timely filed extension. But there's no deadline to transfer the funds from the voluntary after-tax account to the Roth IRA. So that could occur at any time. Now, most folks will transfer the funds shortly thereafter so that the gains are accruing on a potentially tax-free basis. So if there are gains that accrue inside the voluntary after-tax account, those gains will be taxable. But if the gains accrue inside the Roth IRA, they'll be tax deferred and potentially tax-free. So in other words, when the person withdraws the money from the Roth IRA, if they do it as a qualified Roth IRA distribution, all the gains will be totally tax-free. Now, this is a good slide as it shows visually how that account structure might work. For example, the person has a separate after-tax account for their solo 401k. Then they transfer the funds out of the solo 401k to a Roth IRA. So that takes us to the end of the slides that we wanted to go over. We appreciate the chance to discuss these topics. If you're finding this video to be helpful, please like this video, whether you're on LinkedIn or YouTube or X, or share it with others who might find it to be helpful. That helps us to get the word out to other self-employed individuals just like you, other solopreneurs, freelancers, etc. As you might imagine, there's a growing number of self-employed individuals, and this information could be super helpful to them as they try to secure their retirement, maybe catch up on their retirement savings. We also invite you to join our community. It's totally free to join. You can join quickly and easily at mysolo401k.net/my-community. We have over 30,000 members. There's vibrant forums. Again, totally free to join. There's a library of videos and webinars. In addition, we would highlight our AI. We have the industry's first AI, which you're welcome to use. It's totally free at solo401k.net, solo401k.ai. Again, solo401k.ai. That's a great way to quickly find answers to questions and other resources. Well, it looks like that takes us to the end of the session for today. We'll just give it one more moment to see if any questions come across. Again, we really appreciate the engagement. Please continue to engage. We go live twice a day. So just subscribe and you'll get notifications of when we go live. We always appreciate the chance to discuss these topics. All right, until next time, thank you so much.